PantheonAI presents OpenAI bets big on GPT-5. Trade desk collapses. Trump warns of depression. Good morning, investors and traders, and welcome to the PAI Morning Briefing for August 8th, 2025. I'm John.
And I'm Sarah. Thanks for joining us. Hopefully you've got your coffee ready because we have a lot to unpack today, looking at trends shaping the markets here and around the globe.
We certainly do. Let's jump right into the market overview. Things are looking a bit mixed this morning. The S&P 500, for instance, is up slightly, about 0.22%, sitting at roughly 6,369.27.
Okay, so a small uptick there, but what about the Dow, John? I'm seeing it's dipping just a little.
That's right, a very slight dip. It's hovering around 44,034.38, down just a fraction, negative 0.023%. It's so minor it makes you wonder if it's just a momentary blip or something deeper with blue chips.
Interesting. And the Nasdaq, which is always our tech bellwether, is up a bit more, right? About 0.25%, trading around 21,370.47.
Exactly. And to round it out, the Russell 2000 is in the red with a small drop of about negative 0.143% at 2,219.61. It really feels like the market is just catching its breath.
It really does. Now, shifting gears. What's happening in the crypto space? It's always a bit of a wild ride there.
Well, today's no exception. Bitcoin is seeing a bit of a pullback, trading at around 115,973.70. That's down roughly 1.315%.
But on the other hand, Ethereum is actually up. It's trading at about 3,935.97, an increase of almost 0.6%. That's a fascinating divergence.
It is. It makes you ask that classic question, are investors favoring the utility of Ethereum smart contracts, or is this just trading psychology at play? It's something to chew on as the day goes on. Overall, I think these small movements reflect a generally cautious sentiment.
I agree. It feels like investors are hesitant to make any big moves until there's more clarity. So let's dive into some of the bigger trends causing that hesitation. Where should we start?
Let's start with AI. OpenAI is making huge waves with their GPT-5 launch. The headline here is that CEO Sam Altman is still spending aggressively, even saying he's willing to run at a loss if the tech doesn't meet expectations.
Wow. That is some serious risk tolerance. Betting the farm on the future, essentially. But I guess when you're trying to build something revolutionary, you have to be willing to go all in.
Exactly. You have to bet big. Now, that high-risk strategy is in stark contrast to what's happening in ad tech, where the trade desk is facing some major headwinds.
Right, I saw that. Analysts are speculating this could be its worst stock drop ever, largely because of competition from giants like Amazon, who are squeezing their margins.
But you know, the trade desk's CEO had a really interesting rebuttal. He pointed out that Amazon's role is inherently conflicted, since they're both an advertiser and a competitor to other marketers on the platform.
That's a great point. It's like a high-stakes chess game over there. Is this just strategic positioning, or are there deeper systemic issues in the ad market? It's a huge question.
And of course, we can't ignore the political front. Former President Trump has issued some pretty stark warnings to the courts about dismantling tariffs.
He called them a huge positive for the market, right? And even warned that removing them could trigger something like a new Great Depression. I mean, regardless of your politics, that kind of rhetoric definitely stirs the pot and shows how tightly policy and economics are intertwined.
It's a perfect example of that razor's edge. And if that wasn't enough, we've got a couple of other major things to watch. For one, Wall Street analysts are voicing support for Eli Lilly's defensive positioning right now.
And then there's that shakeup at Tesla. A top executive, the one leading their supercomputer innovations, is stepping down. That's a pretty significant move. It makes you wonder if we're seeing the start of a broader trend of leadership changes at major tech firms.
It really does. You know, when you put all these pieces together, the risk-taking at OpenAI, the survival fight at the trade desk, the political drama over tariffs, it feels like we're in the middle of a high-stakes poker game with everyone trying to read the market's next move.
That's a perfect analogy. Or maybe it's like a roller coaster. Some investors are screaming with delight, and others are just white-knuckling it, holding on for dear life. A little heart palpitation is just part of the ride, right?
Huh! Right. So let's circle back and dig a little deeper into the tech sector. The atmosphere is just so charged. You have OpenAI betting the house on GPT-5, which could be huge, but every leap like that brings a cloud of uncertainty and potential regulatory scrutiny.
So for an investor, it probably means considering a diversified approach. You want to capture that potential tech growth, but maybe hedge against the volatility that comes with it.
Absolutely. Now, a sector that's quieter today but still critical is energy. There aren't any huge headlines, but the ripple effects from tech, like advancements in battery technology for renewables, are constantly simmering under the surface. It's a slow burn with transformative potential.
And in finance, it seems everyone is just watching policy. With those comments from former President Trump about tariffs, financial institutions are definitely reevaluating risk. The fear is that any sudden policy shift could really disrupt global supply chains.
Which brings us to the global implications. What happens in the U.S. doesn't stay in the U.S. European and emerging markets are watching very closely. A move towards protectionism here could easily trigger a domino effect abroad.
It really makes you wonder if it's even possible for one nation's policies not to send ripples across the entire globe anymore. Everything is just so interconnected.
It is, and that's why expert analysis is so key right now. Many are suggesting that today's volatility could open up long-term opportunities for patient investors. It feels like juggling flaming torches sometimes, doesn't it? You have to be careful, but what a sight when it all works out.
So, John, crystal ball time, what are your predictions for the coming weeks based on all this?
I think we're going to see this mixed performance continue. The indices suggest the market is in a holding pattern, waiting for the next big signal. Tech and innovation might keep pushing ahead, but the downward pressure on more traditional sectors shows there's still a lot of wariness out there.
That makes sense. And it brings up a great question for our listeners to think about. In an era where hype can outpace fundamentals, how do you decide if a hot tech trend is a long-term game changer or just a fad?
That is the million-dollar question. So as we wrap up, I think there are three key takeaways. First, the market is a story of contrasts. Innovation versus caution. Second, diversification has never been more important. And third, it's not just about the numbers, but the narrative connecting them.
Well said. And before we go, we want to leave everyone with a couple of final questions to mull over. First, how are you balancing the allure of bold, innovative tech plays with the safety of more established sectors in your own portfolio?
And second, what strategies do you think will thrive in both calm and stormy economic waters? Great things to think about. A huge thank you to everyone for tuning in this morning.
Yes, thank you. Remember, PantheonAI is your information copilot, here to help you navigate the financial world. Join us again tomorrow. PantheonAI, your information copilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.